If your business is doing well and customers are really itching for your products, then as a founder, you should always, always, always trade cash for time.
Alrighty, hello everyone and welcome to the Deal Maker Show. So today we have a really spectacular guest, a guest that literally his company got acquired last month, so it's quite recent. And again, that building and scaling, and financing, we're going to be listening about it, whether it's how he met his co-founders, how he went about raising his first round of financing, also how to differentiate yourself in this crazy world of AI and finding product market fit, or even going through the acquisition process and why going through that process versus continuing on that hypergrowth path of raising more money and doing it on their own. So again, the conversation today is going to be quite inspiring, so brace yourself for it. And without further ado, let's welcome our guest today, Dan Wertman. Welcome to the show.
Thank you. Great to be here.
So give us a walk through memory lane, born in New Jersey. And so how was life growing up there?
Yeah, I mean, it was I can't complain, right? I grew up in a middle-class family in a town called Marlboro, New Jersey. It's kind of a quintessential New Jersey suburb, strip malls, large public high school, block kickball games and the like. I actually come from a family of immigrants. My dad immigrated from Canada, my mother from Australia. It's funny, I think reflecting back on my experience growing up, I think there were probably a lot of things about my childhood that could have shown that I would probably become a founder someday. The first thing is about my upbringing that's kind of interesting, and maybe this would be interesting to folks, is that I grew up with a dad staying at home, right? And so my mother actually working. So my dad did all the stuff that moms were doing at the time. And he brought me to school, made my lunch, came to the soccer games, led the carpools. And I think when you're growing up in the 80s and 90s and less than 1% of dads are doing that, it was kind of the first time I kind of experienced that feeling of doing something different, bucking the trend, standing out, paving a new path. And there's something about your lifestyle being different when you're a kid, probably seeded an entrepreneurial spirit and began my journey down this path. So that was something about my childhood that was quite interesting.
And obviously, one thing that I'm sure that shaped you up was losing your mother as a kid. I'm sure that, typically in those moments of adversity is where you're able to really shape yourself up as a human being. And I'm sure that for you, that was a pivotal moment too.
Yeah, it's kind of an interesting thing. When you dig into founders' backgrounds, it's probably not uncommon to find that there was some sort of tragedy in their lives. And I don't know why that is. Perhaps it's kind of the type of resilience that you find experiencing something really awful that lends itself to starting something successful. And my story is no exception. So, when I was still a kid, well before I was a teenager, my mother died in an accident. And, when that happens to you as a kid, your world is kind of shaken, and it can go one of two ways in many experiences. One is you dive into something productive, you kind of distract yourself from everything, and you gain that chip on your shoulder, or it could go the other way, and you can become very insular. I chose the former, so I dove into everything I could learn about any topic. I felt like this wasn't going to define me, and I was going to push through any obstacle and make sure that myself and those around me succeeded.
How old were you when that happened?
Just a kid, probably about 10 or 11. Yeah.
Wow. So as you were saying, you got into learning about everything. And one of the interests that you got was government, which got you into Penn. But funny enough, you didn't really pursue that because you ended up landing at BlackRock. So that's quite the sequence of events there.
Yeah, I mean, Penn is a great program, and they have a School of Arts and Sciences that allows you to explore a lot of different types of studies. I was so interested in government that I really thought for a minute about going to the Hill. And then I have this amazing, memory of I sat down to read Michael Lewis's Liar's Poker, and I became incredibly enamored with finance and the world of markets. And so I actually ended up taking a summer internship at BlackRock and joining as a full-time analyst. My role at BlackRock was actually really, really interesting. I was in a group responsible for coming up with new financial products in credit markets. So we were developing these new and innovative financial products, in particular in fixed income markets. And it really taught me two big things. One is I learned how to innovate and validate new products, right? Obviously, these are security products, but transferable to really any type of product. Distilling product feedback, understanding fast iteration, and that became incredibly valuable for my work at Noetica. Two is I learned deeply about the capital markets and how they operate, and who are the players and why they function the way they do. And that obviously became super interesting to me, and it's part of the reason why I started Noetica many years later.
So in your case, you go to BlackRock, then after BlackRock, law school. Now, obviously, law school, and then going to Wachtell, which is one of the top law firms. I'm sure that they, really planted the seed for what will become Noetica. But law school, I mean, it's incredible how you go from excited about government to then, you go into BlackRock, and are doing financial products to another detour into law school. So it's like those crazy swings, that are taking place where I think that to a certain degree, it also gives you an advantage because now you have knowledge transfer where you're able to apply stuff that is completely unrelated into whatever you have in front of you. So I guess how does that help you, as well as a founder, and what were the sequence of events, leading for you to really become an entrepreneur?
Yeah, it's a really good question. So, I mean, working at BlackRock, I was working with obviously highly regulated products, right? So, I actually became super interested in financial regulation, a policy that was coming out of the Treasury. And so, actually, I very much thought about doing the JD MBA when I was going back to school. And then, turned out that was an extra year, and maybe I didn't need the MBA. So, I actually decided to just go back and do the law degree. I was lucky enough to get into HLS at Harvard, and so I was there for a number of years. And that was kind of really where my thirst for entrepreneurship, really, I think, really took off. Um, I remember when I was in law school, I think I broke the record for the amount of credits I could take outside of the law school at all the other schools in that area at MIT Sloan and HBS. And I remember very specifically, I took my mentor and later investors class, Jeff Busgang, who runs Flybridge Capitals, launching technology ventures, and a bunch of classes like that to really understand how it worked to go from 0 to 1 and the mistakes maybe others made that, if I ever decided to do it someday, that I could avoid. So out of law school, I joined Wachtell Lipton, as you said. Wachtell is known as one of the best transactional firms in existence. Wachtell itself is actually a very entrepreneurial place. People sometimes think about the legal industry as this industry that's pretty antiquated, or maybe stuck in the past. Wachtell is actually quite the opposite of that. It's famous for inventing what's called the poison pill, which famously upended how corporate law is practiced today and ultimately changed an entire corporate legal industry. So it was really a place where I learned something very specific, which is that meritocracy of ideas really wins. And that's something I really appreciated. I remember as a first year there, we were working on this crazy complicated spinoff, and I came to a partner with a new idea for how it could be altered structurally. And, that idea actually ended up defining how the transaction played out. And I think what that reinforced to me was that if you have ideas that are good enough and you can build the appropriate consensus for those ideas, you can really change things for the better. And it kind of ingrained that entrepreneurial spirit a little bit more in me. And when I was at Wachtell, this was 2017 to 2022. I don't know if you remember that time in deals, but I do very specifically because I was working on deals. This was your heyday of deal activity from 2017 to 2020. So I was very fortunate enough to work on some of the biggest transactions of all time. I worked on T-Mobile's buyout of Sprint, UTC's merger with Raytheon, Allergan AbbVie, Neiman Marcus's distressed restructuring when the pandemic hit, which is the biggest retail restructuring of all time. And I think doing all these kinds of transactions started to show me that what it's like for industries to be redefined by transactions, in particular through transformative combinations. I have this like distinct memory of being at Wachtell, sitting down at my desk as a third year attorney, working on all these high power transactions. And I was literally hit in the face with the idea behind Noetica. I'm at my desk, I'm looking at this 500-page, multi-billion dollar, agreement. I was looking at a term and I was trying to figure out, well, should I push my client to accept term A in this context or term B? And I was stuck. So I did what any attorney would do. I called up the senior partner on the deal and I said, hey, where's the database of information where I can literally see and quantify how this term should look in the context of my deals? And the answer was, that doesn't exist. And the reason it didn't exist at the time is because it was virtually impossible, actually, given the technology at that time, to aggregate and index terms in these agreements at scale. The technology just wasn't there to be able to do that. And that was kind of the first inkling I had behind Noetica.
So then what happened next?
Well, fast forward a bit. In 2022, I saw early versions of language models. This was really kind of right before GPT truly came out, like in consumer grade. I remember everybody started talking about GPT kind of in the fall of 22, kind of early 23. But early 22, we were kind of seeing what these models could do. And very quickly, actually, I realized that this was a step function in the way that the technology could actually deliver, being able to interpret language in ways that was originally kind of only coveted to humans. So I actually left in 2022 to start Noetica with a fairly simple but novel idea at the time, which is that we could utilize language models to comb through vast quantities of transactional agreements. Think merger agreements, financing agreements, capital markets agreements. We could index those agreements at scale. And then if anybody is working on a transaction, whether that's a bank, an investment manager, an advisor, a law firm, an issuer, they could actually see how often these terms come up in these deals. They could see the thresholds of how the types of terms they should get in these deals, so that you're not just guessing, you're actually seeing what the market can support. So obviously we've grown a ton since then. That was 3+ years ago. I mean, now we work with a significant majority of the top law firms on the street, among others. We did $1 trillion in transactional volume through the platform last year, which is the biggest, makes it the fastest growing transactional data platform in market today. And that's obviously that's kind of how big it's gotten. And I think most importantly to folks, we built out the largest database of deal terms in existence. It's over 1 billion terms. It's kind of mind-bogglingly big, so that you can actually pinpoint the data behind the transactions. And that was something that as a young associate at Wachtell, you could really never do before Noetica.
So then how did you guys two go about monetizing the operation of Noetica?
Yeah. Well, it's hard to remember, but in mid to late 2022, it wasn't like a foregone conclusion that to investors that AI was going to be the next wave of the future. I don't know if you remember, like in 2022, everybody was still talking about crypto and smart contracts, right? Like it wasn't so much AI was the thing that everybody was investing in. We had built this incredible founding team. I'm sure we'll get into kind of how we met and all that. But one of my co-founders was, a Columbia PhD in AI science, Tom Efland, who was a leading scientist doing work on some of the leading language models out there. And then Yoni Sabag, who had known since I was a kid, who was a management consultant at Deloitte. We all got together and we realized that we could, that this data has immense value as long as we could aggregate it and index it. And I remember those early days of talking to VC funds, and I would talk about the product and the vision, which was largely the same as it was today. And I'd get these questions like, this is interesting, but how does this relate to the blockchain and smart contracts, right? And I'm like, no, you don't understand. It's not crypto or blockchain. It's actually AI. AI is the product, right? And we're going to be doing that. But I think what that early experience taught me is that there's this amazing groupthink in the investor community, and it takes real foresight to see where markets are headed, and as distinct from where markets have been. Later that year, I met Ben Ling from Ling Capital, who's just a fantastic Midas list early stage investor, and he and the fund immediately got it, and they understood what we understood, which is something pretty amazing about this market. And I'll talk about how we monetize it in this context. This is a market that is $50 trillion by global volume. Just think about that number for a second, right? It's the biggest market in the world. The capital markets ecosystem is by far the biggest market in the world. And it's growing rapidly, actually. It's growing at a massive double-digit CAGR. And you can think about this market as broken down into 5 major participants. You have companies of all sizes who all access capital markets. They all do transactions. You have advisors. These are your law firms, your capital markets consultants, your advisory, your banking advisory. You have your banks. These are your JP Morgans, your Goldmans. These are the folks who are actually underwriting all the deals. And you have your investment managers. These are the BlackRocks, the Fidelities, the Vanguards. And then you have the hedge funds, the traders, right? Now, the most amazing thing about this market is that they all rely on data sets, whether it's FactSet, Bloomberg, financial data sets, credit data sets like S&P and Moody's, and fund data sets like Morningstar and Lipper. It's the only market in the world where they all look at one thing. All of those participants look at one thing, which is the contract or the agreement underlying the security. Some people call that credit agreement, an indenture, a prospectus, a preferred designation, whatever you call it. There's a document that governs all of the rights and obligations of a security every single time a security is issued, whether it's in M&A, capital markets, or financing. And nobody had indexed that data at scale. So it's kind of interesting to think about the monetization of that, right? Because if you build out the data set that is extracting from all of the agreements in the market, well, then you monetize it exactly the same way you would monetize any financial data set, right? Whether it's a FactSet, a Bloomberg, an S&P, et cetera. And we did something very similar. So the first step was building out the big data set. And obviously now we have the largest one in existence. And early on, we showed that data set to in particular, we started with major law firms, and it was pretty much immediately we were seeing their minds get blown.
So then talk to us too about capitalizing the operation. I know that first round financing was something else. You guys raised about 29 million prior to the acquisition, but how is it going through the hoops there and through the financings?
Yeah, it's really funny. I'm obviously a finance guy and a legal guy, so I think I come from a world that is kind of outside of the normal startup ecosystem, and so I think one of the interesting things about my experience with fundraising is that I always felt like if you did the right thing on the product and with the customers, the fundraising was always a byproduct of that. And so we actually took that approach from the earliest days all the way up until kind of the latest days of our fundraising. So as I mentioned, Ben Ling at Ling Capital led our first round. That round was actually quite a competitive round. That was our pre-seed round. Interestingly enough, the way I got connected to Ben was I had, someone in my analyst class at BlackRock. And again, I'm coming from outside this world. So I very quickly pinged him. He was at a fund that was kind of more of a later stage fund. And I said, who are the 5 best pre-seed investors that I should talk to? And he said, Ben Ling, you should talk to Ben Ling. So pretty much got a meeting with Ben Ling, laid out the vision. And I think one of the interesting things about the best investors is that they're very good at assessing not only where the market's been. So at the time, it was all about crypto and smart contracts, but they're actually really interested in where the market's going. And part of what I very quickly explained to many of those early investors is the credit markets are rapidly advancing, so much so that private credit was going to be a multi-trillion-dollar asset class in the next 5 years. And I was saying that back in 2022, given my experience in these markets. Now, the infrastructure that they will need, right, from a software perspective and from a data perspective in these markets is going to be far higher than what exists today. And Noetica is going to be on the forefront of that for documentation. And having that early experience in those fundraising rounds, I think really honed my ability to understand, like, not just kind of where explaining kind of where the market's been, but where it's headed. And I think that that's like a hugely valuable thing for all founders to understand. Um, Fast forward a bit, we started signing, customers, pretty expeditiously. We started working with, a few major law firms, and I think when you're doing those early days of kind of iterating product with, your early customers, you have to think about what ultimately is going to be, the product that has product market fit, and then you have to just double down and triple down on that product over and over and over again. And of course, you can outgrow into other sorts of areas as well. But early on, we had a few kind of early design partners, major law firms in the transactional space, which really give us a ton of feedback on how this data set could be hugely valuable to their practices. And seeing the early traction on some of those design partnerships really gave us a ton of confidence that we were on the right track, and then doubling in on a lot of the product market fit we saw. Later in 2023, after many of these firms were starting to talk about our data sets, we immediately started to understand that this was upending transactions. Like, literally, I would get calls from, major law firm partners, top 10 partners in the world, saying, we utilize the system, and the transaction was completely changed as a result. And so, I got connected to Lightspeed Venture Partners, which is a fantastic, top 10 fund. And they immediately got it. They led our seed round. And then the business was growing so fast that they preempted our next round, just nine to 10 months after that. And so I think one of the things that you learn kind of when you're going through this process as a founder is fundraising should be a byproduct of what you're doing really well in the company. And to us, that was making sure the product is right, making sure the team is right, making sure early customers were super happy, and then building from there.
So obviously you're going through this hyper growth, kind of like set of events and motions, and then all of a sudden Thomson Reuters, comes knocking. Why pursuing an acquisition and instead of raising another round and continuing to scale the business?
Yeah, it's a good question. It's really interesting. It's an exhilarating experience running a fast growing company. Towards the end of last year, our growth was pretty incredible. We were signing up a bunch of huge institutions. We were seeing reliance on our data increasing at rapid rates. We were growing top line at top 1% type rates. We were releasing a lot of cool and interesting features. We had also only tackled a relatively small portion of our market, which was primarily legal institutions. And we just really started scaling out to investment managers and corporations. So the momentum was really off the charts. And when that happens, you get a lot of attention. I'm sure you've heard this from other founders. You get a lot of attention from investors and potential acquirers. And we got immediate attention from both lead investors in the next round and a bunch of strategic acquirers. And those processes were moving relatively quickly. When it comes down to it, I think what any founder in that position will tell you is what you want is what's best for the vision of what you're building. For us, that means building out the best data sets of term data in existence and really upending the transactional market ecosystem with our data, bringing data-driven decisioning to these transactions that really has never existed before. When we were talking to TR, it was clear that if we joined forces, we could do something really, really special together. And that got us crazy excited. And doing it together would be much bigger, actually, than probably doing it alone. In other words, being a part of the TR ecosystem would accelerate really everything we wanted to do with the product, with the team, the overall vision, and changing the way these transactions really operated. TR has these incredible products. I mean, in both the legal and financial spheres. We're talking market-leading products, Westlaw, IQ, Co-Counsel, Practical Law, risk products, and the like. And those platforms are pulling decades of proprietary data and content that have been aggregated at scale. So bringing our technology to that ecosystem to utilize those data sets to enhance everything we do in transactional data, that was like a match made in heaven. And it became clear as ever that this is an amazing opportunity for us to accelerate Noetica's vision, and at the same time, kind of TR's vision to bring what we would call market aware AI to every M&A lawyer, every financing lawyer, every investment manager, every corporation in that ecosystem. And that got us crazy excited.
So now let's say I bring you back in time, okay? And I bring you to that moment where you're giving your notice at Wachtell,
Yeah.
and you're able to give that younger self one piece of advice before launching Noetica. What would that be and why, given what you know now?
Oh man, it's such a good question. There are millions of things. um, if you talk to any founder, especially the most successful ones, I'm sure you'll hear that they wish they had done a million things differently. And every mistake you make as a founder, it like really sticks with you in a very personal way as you go through the journey. So I have many of those. Um, One of the most pertinent lessons that I learned early that I ended up correcting later on is that if your business is doing well and customers are really itching for your products, then as a founder, you should always, always, always trade cash for time. In other words, speed is the most important thing to optimize. And the reason I say that is that the faster you can do everything, the more advantage you gain. And the more dominance in the market you can create. And the cash is paid back at much higher multiples later. Um, the way this manifested for us is we made a lot of decisions really early on that were designed super early on that were designed more to preserve capital at the expense of time. And we quickly realized that was a bad trade, right? And we quickly figured that out within a few months of having to make some of those decisions, which we then corrected and then started seeing much of the fruits of that. I would say trading cash for time is one of the most impactful things I learned running Noetica. I think another lesson that I think is one of the most important learnings for me is that as a founder, you're constantly calculating risks and rewards and expected value of certain decisions. And sometimes there's a tendency to hedge in certain areas or projects. And I think what I learned is that if you trust your judgment and you build impactful products, in every case, it makes sense to take bigger swings and larger bets, higher conviction, and true bet the farm type decisions. And I'll give you a great example of this. At Noetica, we have this amazing window into deal terms, which is this amazing thing, right? Like we have this rich alternative data set hidden within 500-page transactional agreements that nobody can quantify except for our software. And that reflects actually the anxieties and the optimisms of transactional counterparties, buyers and sellers in M&A, lenders and borrowers in credit markets. And so we actually track on the platform spikes and troughs of things that are good for acquirers and bad for lenders and good for borrowers and bad for sellers, right? That is a super unique window into the mindset of the US economy, right? Now with this window, obviously we see things earlier than most people see them. We know certain things that are happening in the market well before the public markets know it. And we see it during negotiation of a lot of these deals because we see the documentation itself. For a long time, we avoided making market calls based on this data. So I think we had this view that we shouldn't stick our neck out and tell the market where it's going based on the data set. And that's a hedged decision, right? Because you never want to be wrong if you make a big market call and you're worried that that might blow back on the company. In October of last year, we changed that. We saw large spikes in certain protections in credit transactions on the platform. And it showed us that lenders were getting very, very nervous about distress in the private credit markets. So I published an op-ed in the Wall Street Journal in October where it was called "The Private Credit Winter is Coming." And what I specifically said in the op-ed was the data that we were seeing on the platform shows us that lenders or the smart money is preparing for more distress than the markets are pricing right now. Lo and behold, at the end of 2025, massive outflows in private credit markets. huge amount of turmoil this quarter in private credit markets, which I'm sure you've been tracking, and many of these markets have lost a ton of value. We knew that was coming because the deal term showed us that, and we were kind of too hedged in prior cycles to tell that to the market. And by virtue of making that bold call in advance, we got a ton of inbounds from investment managers, major law firms. Hey, how do we utilize this data set to help our clients get better deals, to make better decisions in investing decisions? And so I guess all that's to say is make bigger bets, right? If I'm talking to my former self, make bigger bets with solid judgment behind them. And I think any founder who considers that will probably be happy that they did so.
I love it. Well, Dan, for the people that are listening that would love to reach out and say hi, what is the best way for them to do so?
Yeah, you can ping me at dan@noetica.ai.
Amazing. Well, easy enough. Well, Dan, thank you so much for being on the Dealmaker Show today. It has been an absolute honor to have you with us.
Thank you. Thanks for having me.